SoFi is one of those special companies that over the next decade, we could see a massive upside potential, somewhere between 5 and 10x. And dare I say, even a millionaire maker stock in SoFi. But with this massive run up recently, is it still a good time to buy? Are there still enough reasons to buy? That's what we're gonna answer in this video today. But first, if you're new here, welcome. I'm Austin, I'm a co-owner of CloudBusinessQuick.com, and I'm a stock market investor, and I'm a proud SoFi shareholder. The channel's sitting at 340 subscribers right now. If you're not one of those people, go ahead and become one of those people. If you are one of those people, thank you so much. I appreciate it greatly. As a thank you for hitting that subscribe button, here's a picture of both my cats, Millie and Luna. They thank you for subscribing. All right, let's get into this thing. I think SoFi is definitely still a buy right now, and I've got 7 specific reasons and 7 catalysts that I think can move SoFi in the short term, midterm, and long term. I don't see a ton of great upside in all 3 of those categories in many stocks in the market today. I see great short term, midterm, and long term upside in SoFi, and maybe a few other stocks. But let's get into this first reason. The first reason to buy SoFi right now is because of those student loans coming back. So the most recent legislation around student loans is that they're gonna start back in probably September. There's not extremely clear dates on this, but most likely gonna be around September. Before the pandemic, SoFi was almost exclusively a student loan company, and a massive portion of their revenue is coming from student loan refinances specifically. So once these student loan refinances start to come back, because people haven't paid these federal student loans in so long that they're not even going to be sure what their payment is. And I would bet a lot of people are going to be surprised at how high that payment is. So a lot of people are going to look to refinance through SoFi, and that's going to bring a ton of new business to SoFi directly through the student loan refinance. And then SoFi's magic is they're going to try to push you out into other products that they own, products and services, so that they can have you not only as a student loan customer, but also as a checking customer, also as a savings customer, etc. and so forth. I'd say it's pretty much a sure shot that once student loans come back, SoFi is going to benefit in an insanely massive way. They've shifted a lot of their focus as it relates to their loan portfolio to personal loans. If they keep that focus on personal loans and then let the student loans come back into the mix, this is going to be a massive boost to SoFi's revenue. I don't think it's going to be small. I think it's going to be huge. We could see another 20 or 30% revenue growth from here moving forward for the next 6 to 12 months as these student loans start to come back and people refinance their federal student loans and turn them into private student loans. And what that's going to eventually lead to is profits hitting the bottom line for SoFi. So that's the next reason I think you should buy SoFi stock right now, is that profitability is on the horizon. Look at a stock like Palantir. Palantir went from being in the gulag, no one ever thought it was going to come back from those low prices, and then they post 2 quarters in a row of GAAP profitability. After they posted those 2 quarters in a row of GAAP profitability, the stock went on an insane 130% run. That's more than a double up from where it was before it posted that profit. SoFi right now is a money loser on the bottom line. They are EPS negative. Once SoFi can move that from EPS negative to EPS positive and actually have some net income and actually show the EPS in the positive, this stock is going to roar higher. Good news about this is, 1, they've got that massive student loan catalyst coming, and 2, they were already making tons of progress as it relates to EPS, as we can see on this little chart. Multiple times on multiple different interviews and conference calls, Anthony Noto, the CEO, has gone ahead and said Q4 is going to be their first profitable quarter in the company's existence. That's huge. When companies turn that profitability corner, a lot of money comes flooding into them because a ton of investors will never, ever touch an unprofitable company. And that's not the worst idea ever, but if you can get in and you see the path forward to profitability, if you get in right before they turn a profit, then you can kind of ride that wave of people flooding into the stock because now the stock is in a profitable spot. A lot of people would love to own a company with as much growth as SoFi. To have 30 or 40% growth on a year-over-year basis is insane. If you get 30 or 40% growth and you're profitable, everybody wants a piece of that company. So getting to profitability is going to be massive for SoFi, and that leads to our next point, is I see index inclusions on the horizon. This is never going to happen until the company gets to profitability. Once the company gets to profitability, more money starts to flood into the company and they get 4 quarters in a row of profitability. then we can start talking about index inclusion. It all depends on where their market cap is at the time where they get those 4 quarters in a row, but I can see them being big enough to be included into the S&P 500. This is not going to happen within the next 6 months. This is not going to happen within the next 12 months, but I think it could happen within the next 6 quarters, which is a year and a half. If SoFi gets an S&P 500 inclusion, that's going to put a nice floor underneath SoFi, and it's going to kind of de-risk it a little bit because all these index funds literally have to go out and buy SoFi shares. So it's going to put a lot of buying pressure in the short term. This will only ever happen if SoFi can post quarter after quarter after quarter of profits. So we need this company to get their spending under control, and they need to go ahead and start posting profits ASAP. If you're looking to invest and you're waiting until they hit profitability, full respect to you, I don't blame you, but I do see a clear path forward to profitability, and then multiple quarters in a row, we'll see that index inclusion come along as well. Next reason you should buy SoFi stock is the insane expansion opportunity they have in their business. Since they're a virtual bank, a virtual platform, they pretty much have access to basically anybody, definitely within the US. And what they're doing right now is they're paying the highest rates that you can really find out there, to be honest, not only on savings account, but also on checking account. But the caveat to this is that in order to get that, you have to enable direct deposit into your SoFi account in order to unlock those rates. I think that's a really, really, really good idea. They don't have any account minimums or anything like that. That's how other companies make sure you stay with them. SoFi makes sure you stay with them by going ahead and making sure that you have direct deposit on so that your money's coming in every single month or every 2 weeks or every week, however often you get paid. So they're already taking market share from the legacy banks that are paying like 0.1% or 0.01% or 0.02%, like just disgustingly low, way lower than inflation type rates on their savings and checking account. People are coming over, especially the younger generations. SoFi kind of goes after the higher income younger people, which is genius because the higher income younger people are going to turn into the really high income, little bit older people, and then the really, really high income older people. So it's a great idea and a great niche to be in. I don't see SoFi slowing down as it relates to expansion and customer acquisition at all throughout this whole decade. I think they're going to keep on firing on all cylinders, stealing market share from their competitors, especially the big legacy banks that are just refusing to pay anything better than a 0.01% rate. And then SoFi can take their banking customers, push them into their loan businesses, push them into their insurance side of the business. It's a beautiful thing that SoFi's got going, and I don't see it slowing down anytime soon. Another reason to buy SoFi shares right now is because of what they've been able to do as it relates to progress in the business through this crazy high inflation time. So not only did they have a massive part of their business, which was the student loan part of the business, that got completely shut down. Well, almost completely shut down. Private student loan servicing was still a thing, but all the federal student loans and all the refinances they would have gotten just completely dried up, and it was like in the snap of the fingers. And it didn't last for a few months, it lasted for a few years. And they still have made so much progress in their business, growing at 30 to 40% every single year throughout that time. If you would have gone back in time and predicted the future for SoFi, I bet almost everyone would have said, well, it's the end of days for SoFi. They're done because of this student loan forbearance that's going to be drug on and on and on and on. But no, they were able to pivot, and they pivoted their loan side of the business into personal loans. And they've been originating an insane amount of personal loans, way more than they ever did before, just because they were able to pivot their business, which speaks to the fact that this management team knows what they're doing. This management team knows how to market to convert from an impression to a customer. That is amazing. If you can have a management team that can do that in any kind of environment, in a massively high rate environment, especially loans at that, this is crazy. They've done an absolutely amazing job running the business despite having all that stress of the student loan revenues completely gone. This is all while still building the business-to-business side of the platform, which is the Technesis platform and the Galileo platform that together make the technology platform. A ton of different companies are using this. A lot of the neobanks are using this back end of banking, and SoFi is still strongly on the pursuit of becoming the AWS, Amazon Web Services of the fintech space, trying to power the back end of banking and have that kind of be their Trojan horse that gets them to the promised land while having their bank bank side of the business, which is also ridiculously profitable. The last reason I think SoFi shares are a good buy right now is that they're really not trading that expensive when we look at the banking sector as a whole, or someone huge like JP Morgan. When we look at valuation metrics, typically we see higher growth companies commanding a much higher valuation because they have more expansion opportunity, more growth over time. Makes a lot of sense, right? So when we're looking at the price to book ratio of SoFi versus the price to book ratio of JP Morgan Chase, JP Morgan Chase has about 1/10 of the growth as SoFi is going to have. That's projected, of course, that all remains to be seen, but if the past predicts the future at all, SoFi is going to grow way more than JP Morgan. They just have more expansion opportunity because they're a lot smaller company right now, and they haven't reached those sizes where it's insanely difficult to grow revenues in a substantial way like JP Morgan has, because they've been around way longer. That said, you would think that the valuation, it might not be a 10x in terms of price to book from JP Morgan to SoFi, even though they have 10x the revenue growth, but it should be a lot higher. It's only a little bit higher. The price to book ratio of SoFi is very close to that of JP Morgan. It was a lot more attractive a little while ago when it was trading cheaper on a price to book than JP Morgan. But as we know, SoFi has gone on a nice run up recently because of the excitement around the student loan refinancing coming back. But it's still very reasonably valued on a price to book ratio, and that's that ratio we like to look at for bank stocks, because that's the most important as it relates to bank stocks. So what am I doing with my SoFi shares? I am definitely holding all the SoFi shares I have right now, and I'm looking to add like 1% more than I have right now. I'm almost fully maxed out in terms of the total number of shares I want to own for SoFi. I've got a few more. I'm going to go ahead and buy those as we see a little bit of weakness in the short term, hopefully. Otherwise, I'm not going to be too picky around pricing. I'll buy my last few shares here within the next month or so. If you haven't opened a position now, is it too late? No, I don't think so. Just make sure you're not going all in, all the money you want to buy all at one time. Make very consistent buys of a particular size and have a goal number of shares that you want to get to, so that it's more disciplined and it's not emotional and it's very calculated. We don't want to be emotional. We want to be calculated with these decisions. I want to know what you're doing with SoFi shares down there. Let me know if you're buying. Let me know if you're selling. Let me know if you're holding. Let me know if you're shorting the stock. Let me know if you think it's the best company in the world, worst company in the world, or somewhere in the middle. I want to hear about it. Thank you so much. If you made it this far, go ahead and subscribe. Have an amazing day.